Hi, I'm Noelle with the GrahamTeam, and I'm bringing you a recap of quarter two of 2022's housing market. And is it interesting? The market turned 180 degrees in less than 30 days. We went from a seller's market to a buyer's market. In May, we were still in a very strong seller's market with inventory around 30 days, and the median sales price was still climbing. 30 days later, at the end of June, inventory was over 2 months and the median sales price began to drop. Fast forward to just a few weeks later into July, and we are now at over 3 months of home inventory, and the median sales price has dropped 3.5% to $465,000. What's caused this dramatic shift? There are a few significant factors, starting with interest rates. Home buyers were used to mortgage rates in the 3% range. Then they shot up to 4%, then they shot up to 5%, and in June went over 6%. It had buyers' heads spinning. This dramatically affects what the buyer can afford to purchase. The rate hike from 4% to 6% on a $450,000 conventional loan with 5% down jumped $522 a month. Number two, affordability. In our first quarter market update, we reported that the median sales price in March exceeded the home affordability index when the ratio went over 7. In March, we had a median sales price of $460,000. Then you add in the increase in interest rates. Home buyers must make an additional $18,900 of additional income to qualify. This moved a lot of buyers either down in price or out of the market. Besides the drop in buyer demand caused by the interest rate hike and affordability, we've seen a dramatic decrease of Californians moving to Nevada. A large portion of home buyers who were making cash offers or offering well above list price were originating from California. That faucet went from a full force to just a trickle. Another factor is value. With the drop in California buyers, the local home buyer has repeatedly stated, I do not feel that that home is worth that amount for the square footage and age of the home. They're not willing to pay asking price for homes. They want a greater value in their purchase. Inflation's a big factor. With the rising cost of everything, buyers simply do not have the extra funds for an increased house payment. Of course, we have negative headlines. Every news channel and almost every economist is reporting the likelihood of some sort of recession in the upcoming months. It's a natural tendency to be more conservative when the future seems uncertain. The question all buyers are asking, is this the right time to buy or do I wait? There is no doubt that with the drop in demand, this will affect housing prices. We've already seen a price drop about 3.5% from this year's high of $480,000. Where will the prices bottom out at? That's a magical question no one has an answer for. The fundamentals in the economy state we're 7 years short of housing in the United States. However, the other fundamental is the ability to purchase. The affordability factor is running in contradiction to the supply shortage. So who's winning right now? Landlords. Rents are still at record highs. However, we have seen the market soften ever so slightly in July. Last quarter, we reported that lease rates skyrocketed 22% to a median price of $1,950. At the end of June, the median lease rate was still climbing to just over $2,000 to $2,025 for approximately a 1,625 square foot home. Before jumping into our thoughts for the remainder of 2022, let's review a snapshot of where we are for the second quarter of 2022. In June, the median home price for a single family home was $480,000, a 21.5% year-over-year appreciation. So what can we expect for the remainder of 2022? Well, regarding sales prices, median sales price is going to drop. Our crystal ball takes into consideration interest rates, the Federal Reserve, wars, employment, inflation, and a possible recession. When we shake our crazy 8-ball, we're getting all kinds of different answers and all different outcomes. Okay, kidding aside, we believe it's reasonable to assume a price adjustment in the range of about 5 to 8% for the remainder of the year. Price depreciation could be limited to a short period and then could level out, and we'll start to see homes to reappreciate. Regarding interest rates, if inflation levels out, we feel the market has already priced in current conditions and that rates will continue to fluctuate between 5.5% and 6.5% for the remainder of the year. Inventory, until buyer demand returns, even with the very limited supply of housing we have now, we expect it to rise to about 4 months and then settle back down to between 2 and 3 months worth of inventory. Buyers have opportunities they didn't have 30 days ago. There's a lot more homes to choose from today, and buyers are not being rushed or forced into making a quick decision on a home. There's a lot less out-of-pocket expenses for buyers as well. No more paying over appraisal offers, and sellers are also willing to work with buyers on contributing to some of their costs to close on a home. They're also willing to work with buyers who might be taking advantage of programs such as down payment assistance programs. Buyers also have more favorable terms they can work with. Requesting repairs on a home are being considered now. And again, buyers have time to determine if a home they're touring is the right home for them. And they are not competing with multiple offers like you were 30 days ago. Renting is going to still be expensive. Buyers will need to reevaluate on whether you're willing to pay into your landlord's equity and build their portfolio, as opposed to waiting to see if home prices drop. That is something you've got to consider both sides of. The sellers had a good long run, but the market's leveled out now. If you do not have to sell right now, we would recommend that you wait for the market to settle down a little bit. However, if you do need to sell within a year, consider that prices may continue to drop, so you might want to list sooner rather than later. You also want to price your home to the current market value. Overpricing your home will most likely result in a lower price to you in the end. Look at the trends, keeping in mind the end of May and beginning of June were where the height of the market hit. Marketing of your home is going to be extremely important. Having a high quality online presence will be crucial. Having patience, it's going to take longer to sell. Probably plan on 60 to 90 days to sell your home. Thank you for watching our market report. Please contact us if you have any questions regarding the report or questions about the market in general. Also, make sure you follow us on social media.